All right, Dalian, thank you so much for taking the time talking to me. Really, really appreciate it. Really nice. I've been trying to get you here, and it's really, really nice to talk to you. So, you have this shirt talking about like saying founders, which is awesome. And you're a partner at Founders Fund, right? And um, you've been investing for some time from uh, maybe 10 years. How long have you been investing for?
Let's see, as a full-time venture capitalist at this point, about 6.5 years. I guess you could kind of count, in college, I did do this thing called rough draft VC, where you do these very small scale checks into, companies that are being started in dorm rooms. But I don't know if I'd really, quite count that. So yeah, more like 6.5 years.
That's awesome. Yeah. So I think you share on Twitter that most of your investments are outside of San Francisco, and that's an interesting trend. Do you think that's a trend that like other investors are going to start to see, or is just something that happened to you? Like, why do you think that's the case?
Yeah, it's interesting, you know, when I would, ask for, sort of, feedback and advice, back in the day when I was, first starting in VC, there was this sort of general predisposition, towards, and especially call it like, in the early days when I was out there, call it 2012 to 15 timeframe, where, at that point there were very, very few companies outside of the Bay Area that had become, particularly massive. Like it was even a stretch to, be investing in New York and things like that at the time. And so the general sort of philosophy was like, look, yes, there may be companies elsewhere, but if you can't, hack it, being based in the Bay Area and just investing in the Bay Area, you may or may not be, a world class venture capitalist. So you should probably just focus on like your own backyard. Um, and I can't claim that it was, sort of super deliberate, but one of the other pieces of, sort of feedback and advice that I got was, when you're investing in a company, you should have a really strong answer as to like, why do you uniquely have access or appreciate or can win this particular, investment? And when you're an early career venture capitalist, one of the things that you're much more willing to do relative to others is just like hop on a plane basically last minute. And so if you look at one of my best basically early investments, this company called Sword Health that I led the Series A for in the roughly winter of 2018, like December 2018. And a part of why I was able to, win this investment that, turned out to be such a strong company was because I had this willingness to, relative to like a, general partner at a major firm, from meeting the company to flying out to like Porto, Portugal to go meet with them, was willing to like do that under a week. Versus like if you're a general partner, at a large firm, you have so many obligations and commitments between family, board seats, managing the fund, LP meetings, etc. That like your flight, your schedule, is just not that flexible. Um, and so, somewhat, by accident, I ended up actually, investing a decent amount outside of the Bay Area. And then if you look at my returns over the past, 6.5 years, they are by far, it's not even, it's unquestionable, sort of 99 point, 5% of my, sort of returns are all outside the Bay Area. And I think a part of that is it started off with some of this, sort of early, sort of career venture capitalist needing to figure out a way to differentiate myself. And it turns out, sort of hunting outside of, just my backyard was one of the ways to differentiate. But then over time, I just started to realize that like I just did not necessarily, align with the San Francisco Bay Area thinking around culture, company building, who to hire, et cetera. And so I just like continue to lean into that, more and more, investing in places like LA, New York, obviously more recently Miami, and then, certain parts of, Europe. I'd say obviously by default, Europe tends to be a more extreme version of all of the faults that San Francisco has. So, most of the time it's not the best place to be investing. But yeah, I think, if you look at it on a go forward basis, I just think, if you're, studying where returns are going to be generated, it's not to say that like San Francisco is not going to build big companies. But I think if you actually look at it on a returns basis, there's just a huge oversupply of capital that's based in the Bay Area relative to, the companies that are going to be built there. And so you end up just having everybody competing for the same deals. And so obviously that ends up, affecting pricing, and it makes it so that the IRR looks far less interesting. So
That's
yeah, I don't think San Francisco will build a lot of companies for sure, but I don't think it's necessarily the best place to be making returns.
yeah, that's very interesting. There are two parts of it that come back to me that are like very like Teal related. One is like competition. Get like don't look outside of competition, right? So like investment wise, you're basically saying, look, all the competitions is inside one location, and the returns for you are outside that competition, right? And
Now, sometimes people get into the sort of intellectual trap of they focus so much on contrarianism that they go so far that they end up like investing in companies that are like in Uganda or something like that, or like somewhere like truly middle of nowhere, where they have no ability to like ultimately, if you are building a company, yes, it is great to be contrarian early on, both as an investor, but then also I think as a founder, you want to generally be contrarian about your thesis of the world. But ultimately, if you're going to become successful, you actually need to shift to consensus, right? Even like the SpaceXs of the world, they were highly contrarian in 2008. Obviously, right now it's like the most sort of consensus company in the world. And so, if you take that intellectual idea too far to the extreme, you can actually get stuck in this world where you invest in companies that are so contrarian that they just never even have a chance to basically become consensus and become successful. So I do think it is this sort of balance of don't go so far away from where everybody else is that you end up just in the middle of nowhere.
no, I agree with you there. And the other part that I want to mention is, I think 5 years or 10 years ago, Theo was like, when he moved out of San Francisco, he mentioned most of the returns were around Stanford. So like if you think about Facebook, if you think about Google, they were all within like a very small radius. And he moved out saying, look, I don't think that's the case anymore. And it seems that like you're the example of that being the case, right? Like some of your best investments are outside the Bay Area. And I want to segue to a question related to that. So, I mean, you mentioned, I think it's Sword Health in Portugal, and in all the places, as you mentioned, Europe, it's like one of your best investments comes from Europe. And there's Ramp, which I think the HQ is in New York City, right? And I was just looking around at the top companies, and they seem to be not necessarily in San Francisco. Maybe there are some in the Bay Area, but like they are outside of the Bay Area. Even like Wiz, which I think is one of like a great, like one of the biggest examples of like successful companies that's um, based in Tel Aviv, and it seems like a lot of the returns, or like a lot of the earlier stage companies are outside of Silicon Valley. Um, do you think that the best returns in the next 10 years are going to be like outside Silicon Valley, or do you think that's like we will still see returns in Silicon Valley? It's just that the competition is really high, and you have a lot of investors there.
Yeah, like is San Francisco going to mint, zero unicorns over the next decade? Like, obviously, no. There's enough of a density, of talent, capital, et cetera, there that there will be, sort of, some level of production of, large and interesting companies. But I think if you look at it on like a sort of per capita basis of founders and VCs that are there, I think it's going to be far less successful than some of these like net new ecosystems where there's just less of this like intellectual bubble and sort of FOMO lemming sort of nature where everybody's running towards AI and everybody's building the like AI for plumbers and the AI for doctors and the AI for lawyers. But there's like 100 different companies all focusing on the same thing, so they all outcompete any of the margins that are to be had there. And so again, I think what I was mentioning earlier is if you study it on a returns basis, I think that's actually where it really makes a huge difference. Where I think because there's just such an oversupply of capital in San Francisco relative to I think how many unicorns are going to be built there, the pricing reflects that given the level of competition. And so while there may be a lot of founders that do well in San Francisco over the next decade, I think there's going to actually be very few investors that do well if they only focus on San Francisco being the place where they generate their returns. And so obviously Peter was very early on to this idea, and obviously voted with his feet to move out of the Bay Area. In some ways, maybe I should kick myself for not realizing sooner that I should have left, and that even before the pandemic hit, it was clear that my returns were not going to be, based in the Bay Area. And so, why did I continue to force myself to be there, for another, year and a quarter or a year, basically, even after, the pandemic started? Why did it take both, once in a generation pandemic and then a full year of being miserable in San Francisco to realize I should finally leave? But, thankfully, cleared my mind and, realized that that was not the right place for me. And it's funny to, see this stuff play out. I was, talking with like a, sort of 20-year-old founder, yesterday, working on a very sort of interesting idea. And my feedback to him was like, look, I would be interested in this if not for the fact that the company's HQ is in Hayes Valley, and so the likelihood that you're going to build a generational sort of AI company in the Hayes Valley when like all your engineers have like 100 different companies they go work for. Any idea that you work on, there's going to be 100 different competitors. Every VC is going to fund every single one of your competitors because they're all going to want exposure to this. Just like the likelihood that this turns out to be the multi-billion-dollar company, basically impossible. Now, if you uprooted yourself and your team and go moved into like the middle of Montana, then I would actually like be more interested. Now, again, that's maybe too contrarian in some ways, but it's like, move to New York, move to LA, something like that. I would actually like, believe in that, company more. But the likelihood that an early stage, AI company, it's not to say that there are none, but there's just so much competition that, it's on a per capita basis, it's not gonna look great.
Yeah, it also reminds me of DeepMind, which I think Founders Fund was one of the earlier investors, and it's based in London. And probably one of the reasons why it was so successful is that London probably has a lot of talent, and they were able to tap that talent, like in AI. If they were to build in Silicon Valley, there's Google, there's Facebook, there's so many companies competing for the same talent. So that's interesting that you mentioned there. That.
Yeah, if you look at SpaceX, I think they had this dynamic, play even more extremely, in their favor in that they were based in Los Angeles, obviously, so they weren't, competing with as much talent as you do in the Bay Area. And then twofold, they also had a set of talent that was just so specific, right? If you're a thermal or a fluid dynamics engineer, you can't go like leave SpaceX and then go join a SaaS company, right? And so they had this like sort of double lock-in level where you had a combination of both weird geography and you have very sort of domain specific skill set. And that's why you look at the various top called 10 companies in Silicon Valley or the tech industry, and SpaceX has by far one of the longest tenures, even though they have the issues around burnout and Elon being a difficult boss, etc. They still the average employee there, I think the like tenure is like 6.5 years or something like that, versus in the Bay Area it's closer to 3.5. And so sort of massive delta.
That's amazing. I didn't know that. So on the investment side, I mean, you have like a good amount of experience there, and I would like to understand like what are the characteristics of the best investments that you made and the best founders that you invested. Are there common characteristics and things that you've found there?
Yeah, I mean, I think there's not one prototypical, sort of best, founder archetype, right? Highly, dependent on a, company by company basis. There are some things that, sort of, you can use as, sort of natural, fits or filters, let's say, across, all companies, which is, one of the, first and primary ones that I like to say is just like, why is this very obviously this person's life work, or like, why are they the person that is going to be, by far, the best suited, to go tackle this problem? And I think there are times where that answer is extremely obvious, and there are times where it's not. But when it's obvious, that almost, certainly ends up being, sort of far, better in performing company. The second is just like, just true founder resilience, where, you're going to get your teeth kicked in, all the time in a company, and, whether or not you get back up is basically the differentiator between, the average versus the top 1%. And I think that's something that you can actually typically screen for, even before somebody's, sort of professional life. I think you can actually look at resiliency based off of, how they manage their, personal life. Like, one example that, we will sometimes, rely upon is, if somebody's been like a D1 athlete or something like that, in college, while also continue to maintain, sort of super high GPA, great academics, that almost always turns out to be a really phenomenal founder archetype, because the discipline to be able to sort of maintain that during college, that type of same type of discipline, if you apply it into the world of sort of startups and technology, almost always ends up providing a level of resiliency that truly outperforms. There's actually this like sort of Paul Graham video that I saw the other day, where he was basically talking about, okay, if you take like the sort of perfect founder that is 100 points in resiliency and 100 points in IQ. And obviously, if they're 100 in both, they'll turn out to be Elon Musk. Now, if you start docking points on the resiliency side, you don't actually have to dock like that many points. Like you can get like 10 points down or 15 points down, and all of a sudden you have just like this like frustrated academic that ends up being relatively lazy and doesn't work that hard in life. Versus if you leave resiliency at 100 and you start docking IQ points, You can dock a lot of IQ points and you will still have a really phenomenal founder. And hell, even if you go all the way down to like 10 out of 100, the person might not be a founder, but I'll guarantee you that they're basically going to be rich. They might just like own a bunch of car dealerships rather than, run a tech company. And so it just shows that like, resiliency is the thing that you need to like, much more, rely upon than, any, sort of measure of IQ. So yeah, those are probably, sort of the two, let's say like, primary filters that, I think about when I'm meeting with a founder.
Yeah, that's interesting. I've realized that as well, that resiliency is like the most important factor. And I think it's related to the compounding factors. Like if you're building a business, it compounds, right? Like you sell to one customer, then like next year, two customers, and it's just that the curve might be slower if you're you know, not as
Yeah,
smart, but
in order to affect that curve, you just have to be there every day, and that's the biggest thing. Is just like showing up every
yeah.
day is actually sometimes the most difficult part. And I have to admit that's something that I think I've gotten better at over time. Like I think part of why my first company failed is like I didn't show up every day, and a part of it was it wasn't a like problem set or something that I was like deeply passionate about. And so when we hit some level of friction, I immediately basically like gave up versus something like Varda where it's like truly life's work. It's like I've hit far more friction and difficulties and sort of life-threatening situations with Varda than I ever have in anything else that I've ever worked on in my life, and yet I show up every day.
Yeah, I had the same experience in my first business I started, and we raised some good amount of money. We reached a lot of users, but I think that was like the missing part was resiliency. And it's interesting that I see like it for me it's very clear that resiliency is like the most important factor. So let's switch a little bit topics. So you're talking like you've worked a lot closely with Keith Rabois. He's one of the best investors in the globe. um, um, and like I wanted to understand what are some of the qualities that you admire of him, and like what's the single most important lesson that he taught you.
Yeah, I mean, I think it's funny. I was just talking about this, with a friend at a separate venture firm where I think there's a variety of world class investors that end up sort of differentiating on a singular trait, sourcing, picking, winning, figuring out how to support companies sort of post investment. And in order to be a world class investor, you need to like excel and be world class at least sort of one or two of those things, and still be very solid in the rest. And I think Keith is one of those very rare investors that is just like truly world class at all aspects, sort of being a venture capitalist. And so, I think working with him, have just learned, so many things from both his operating and, venture capital, background. Actually, when I wrapped up my time with, him as chief of staff, I did, sort of write up this original, sort of series of 6 essays and basically like, what I learned, from Keith Rabois. And it was everything from, interviewing executives, running a really effective organization and company, how to run super effective board meetings, how to actually sort of tell a story and raise capital before you've launched a company. Just so many so many aspects of it. I think when I think about sort of what singular piece of advice has been basically the most impactful to my career, I think the thing that I've learned the most from Keith that's been the most impactful is thinking about company building and co-founder sort of team creation closer to how a Hollywood movie director does than A/B testing or whoever you happen to stumble into. If you look at basically how he built the original founding team of Open Door, he knew all of the other sort of 3 founders that he put together, but none of them actually knew each other. And the way that he chose them was because individually they were each world class in the 3 basically top core risks of the company, and each of them obviously were world class in sort of different risks that they had coverage basically across all of them, and then Keith in some ways having coverage across the 4th. And again, it was more like drafting an MLB team, right, where you're like using statistics analysis, personality traits, et cetera, and putting them together rather than just like happening to start a company with your best buddy from college. And ultimately, I think it's taking that same approach and having applied it to Varda, I think is ultimately what has made sort of Varda what it is today. So when I think about the singular piece of advice that has had the most impact, it's definitely that around basically like how to think about sort of building up your co-founding team.
How did you apply that at Varda specifically? Is that the co-founder that you recruited, or I mean, that you joined
Yeah, I basically
forces
thought
in?
through, what are basically going to be the core risks of the company? What are parts that I can basically tackle myself and think that I'm world class in, and what are the other parts and what would the sort of personality, career background, skill set, et cetera, look like for that. And so in particular, in order to build something like Varda, it's not only do you have to manufacture things up there, but you have to be able to bring them back down. And so I was thinking through basically who is world class and has basically worked on specifically sort of reentry vehicle engineering, but also is very well renowned and can actually go and manage, build, and recruit this type of team. And so they need to not only have worked on that, but would be very, very sort of well regarded in that world. And if you sort of apply that filtering and think through the personality trait that's going to be appropriate for a founder of a large company, you basically narrow down to in the entire world there's probably 3 people that sort of fit that skill set, and ultimately made sure to basically go and meet and interview those 3, and by far the best ended up being my co-founder Will Brewy, who we've been working with now for 3.5 years. So yeah, basically applied it there, and I think more broadly, even beyond just my co-founder, is the entire first 10 hires. We opened our offices January 19th, 2021, with basically 10 full-time people, and each of them basically being specifically world class in all of the also subcategories of risk that we needed to identify, basically burn down. Everything from business development and government relations with the DoD, to the thermal engineering around heat shields, to structures, to software. All of that basically had world class folks at the company working on each of those core risks, literally from the first day that we opened the office doors.
Interesting. So let's switch a little bit topics on Founders Fund. So I think one of the mottos of Founders Fund, I don't know if you guys still have it on the webpage, but it was there for some time. That was the saying that Peter Thiel said: we wanted flying cars, and instead we got 140 characters. And it's around the thesis of stagnation, technological stagnation, right? And I think one of the theses around that is that in the world of atoms, there has been little progress to almost none in the past, maybe 50 years, 60 years. And in the world of bits, there has been some progress, but that's just showing how much stagnation there is. Because when we think about the future, we think about the Jetsons, we think about Star Trek and things like that, and we still don't have that, right? We have phones that we can communicate. We're talking over the internet right now, but we don't have flying cars. We're not right now. We don't have spaceships yet. So what? Obviously he's stating there's some technological stagnation. What areas do you think in the US are not moving fast enough and could be advancing faster, not only in the US but in society in general?
Yeah, I mean, I think if you look at when that was published, in the 2011, 2012 timeframe, it's accurate that over the prior decade before that, effectively all of the innovation was in the world of bits, and nothing was really happening in atoms. And even in 2012, you had the early signals of things like SpaceX, and Tesla starting to come online, but still quite early. I think I would argue that thesis is obviously was accurate, sort of at the time, but I think Silicon Valley has shifted significantly. Obviously, 2012 through 2022. There was definitely progress. Obviously, we rolled out electric cars. We started landing rockets, but still, I would say broadly, Silicon Valley deployment of capital was still largely focused on software and AI. I think over the past 2 or 3 years, there you're seeing a significant acceleration in the world of chips, hardware, even more sort of rocketry and aerospace companies like Varda, and a wide set of areas. And so, I think I actually, generally am, actively a vocal critic against this sort of stagnation theory and, sort of thesis, in that, I think there were just some things that, needed some time to, bake. And, we're hitting basically inflection points across a multitude of different, industries now, whether it's, density of transistors and, compute on chips, to, battery energy density, to, launch costs, to orbit. And so, I actually, don't, have any particular area, in the United States, let's say, economy or broader, sort of technological development where I think things, are stagnating. It's just, I'm definitely a, whatever the, sort of current, meme, is around EAC. I'm definitely, a believer in the fact that technology is only, continuing to accelerate and only will continue to do so on a go forward basis. And there's nothing that, I am privy to or see that, gives me any, credible, data around there being stagnation in any particular field right now.
Interesting. So you mentioned space, right? Like there's a lot of investment into space, and Varda is one of the uh, most important examples there. And I shared to you on the internet this article about China and Portugal, how they were exploring. China had the government and sent these huge ships to, I think, Africa to to bring down giraffes and like animals and things like that. And eventually, there was a turn of I think emperors or whatever, and then they stopped that development. But Portugal and in Europe, there was the prophet Motif, that they had these small ships, and they were kind of like they were entrepreneurs, right? So uh, you had investors that would invest into this exploration, um, um, and then they would try to bring new materials and things like that, and that exploration led to America, right? Like eventually, America was founded because of that exploration, and I think there is something similar that happened right now with space, right? We had the space race with Russia or USSR at the time, and the US, and then for such a long time there hasn't been that much development there. But most recently, with SpaceX, but I think the government play a little bit of role in there with COTS, which was paying, I think, per amount of weight instead of paying per mission, um, and that unlocked a lot of the industry. So can you like describe a little bit more about the industry itself and how it's been formed and how SpaceX has led the way there, and how big the industry is? Yeah.
Yeah, I appreciated your analogy you provided in that. I've been thinking about this general thesis for a long time that if you study in all of human history, when humanity gets any type of sort of sustainable longer range settlement, it ultimately only ever sort of grows and sustains if there's fundamentally economic incentive. And so the American colonies are obviously an example of that back in the day. But your analogy with the sort of Portuguese and sort of Chinese naval systems, where the Portuguese obviously focused on profit incentives and ultimately had the largest sort of naval power 100 years after building their first merchant ships, to the Chinese basically ended up shutting down their navy because ultimately it wasn't that valuable for the emperor to bring back elephants and tigers from Africa after the first couple of trophies. And so think that in some ways the same basically parallels exist in the world of space, in that in some ways in the 1960s and early 1970s, the United States was basically doing the equivalent of the Chinese approach, in that they went to the moon, they brought back some lunar rocks basically as prizes, but ultimately because there was no sort of economic gain, the United States taxpayers were unwilling to continue to be burdened by the cost of the Apollo program. And so you went on this sort of in some ways post 1972, you almost had on the order of like a basically 40-year stagnation, in that you had sort of work on things like the space shuttle, International Space Station, et cetera, but there was no real improvement in the sort of economics and business of space. And not saying there was zero, right, but it was at a very very slow pace. Commercial satellite internet, commercial satellite communications, things like that, just like and observation. These things were just so sort of nascent, early, sort of in small over the following 40 years. And I think SpaceX in some ways woke up the industry from its stupor, in that it very aggressively both made the fundamental sort of inputs into any space business, in that launch costs far cheaper by focusing on reusability. But they not only did that, but also basically proved to the world that when you have that fundamentally much cheaper input, that now you can build a beautiful sort of business on top of it, in the business they've built with Starlink, that is now generating massive amounts of sort of cash flow for them. So I think we're just in the still early era in some ways. Like it's as if we've rediscovered the sort of Portuguese approach to just exploring the world. We're definitely nowhere near to America being founded, which will probably be the first lunar or Martian colony. But the industry is now able to build atop of that first generation of companies, call it SpaceX, Rocket Lab, Planet Labs, and the infrastructure and supply chain that they've made far more resilient now enables a whole set of sort of new business models and companies. Things like what Varda is doing, one of our portfolio companies, Impulse Space, around in space maneuvering and gas stations, to other sort of use cases. And then I think as companies like Varda and Impulse succeed, that's what will then enable the next generation of commercial companies. Where today lunar ice mining I don't think is a commercially sort of viable business model. When you have something like Varda, when you have something like Impulse, really off into the races, both those companies are going to need a lot of water, and so ultimately it will be far cheaper to bring it from the lunar surface rather than from Earth. Versus today, there isn't really that much water consumption up in space, and so that's why something like lunar ice mining is difficult to commercialize today.
Interesting. So, can you describe a little bit more about the companies that are in that space? So, like, what are the companies and what areas are they working on? And what are the most interesting companies there? So, maybe you mentioned Impulse. I think there's Rocket Lab. There's like Planet Labs. There's like a big ecosystem there, right?
Sure, yeah. So in the first generation of companies, right, call it, founded in the, sort of 2000s, you have companies, I'd say basically the top three are, SpaceX, Rocket Lab, and Planet Labs. SpaceX obviously focuses on both launch as well as satellite communications. Rocket Lab focuses on both launch as well as, I would say, sort of, call it like space supply chain, right? They have a very large business, sort of selling both, components and full, satellite systems, like what Varda purchases from them. And then, Planet Labs, entirely focused basically on, in space, observation of the Earth. Those are they call it the first generation of companies. Sort of since then, there's obviously been a lot more companies that have started to launch, but I would say the second generation of companies that are sort of different business models than the first generation are companies like Impulse Space, which is doing in-space maneuvering, Varda, which is doing in-space manufacturing of pharmaceuticals. And those are the ones that I would say are like the in-space net new business models. There's a whole set of companies that are also very interesting that are around, call it like the resiliency of the supply chain of space. So as one example, one of our investments, Hadrian, that basically does fully automated aerospace, basically machine shops, as an example of one of the companies that focuses rather than in space net new business models. It's more how do you sort of make the terrestrial supply chain for space far more resilient. And then there's a whole set of other companies basically in that sort of same world. But yeah, those are some of the probably most interesting examples. And then I think there's probably not going to be that many more in the second generation that make any sense. I think you're gonna have to wait another just like there was a decade between the first generation and the second. There's probably going to be another decade before another set of sort of business models are unlocked or enabled by the second generation's success.
Interesting. And are there any trends there that will make the third generation possible? So, like, for example, SpaceX has a new rocket that might reduce the cost. I mean, they might pass the cost down to the consumers of that service, SpaceX, or they might not. But that might be one unlock. But also, I mean, Varda wants to make manufacturing in space, and I think Rocket Lab is basically creating the containers for people to send things to space, and then you have Impulse that makes it easy to maneuver. Like, what are the unlocks for the next generation, or kind of the things that will unlock for the next generation? Are there anything that might be interesting in the next generation that we can see right now?
Yeah, I think when you think about what SpaceX built in terms of infrastructure and Planet Labs was just an initial drop of sort of launch cost to orbit, and let's say more of a commercial supply chain for satellite components, which was effectively non-existent in 2008. That was partially why SpaceX had to build everything in the house. That was what allowed companies like Varda and Impulse to start to build up. I think what Varda and Impulse will build is basically a need for large scale material usage in low Earth orbit, right? And ultimately, I think that's what's going to enable business models like asteroid mining, lunar ice mining, et cetera. Because right now there isn't large scale material consumption, so there just isn't a commercial market for bringing different types of materials into low Earth orbit, not just from Earth's gravity well. And then, yeah, I think you're going to see this continued trend of SpaceX bringing Starship online. You're going to see this continued trend of launch costs, not only from the first generation obviously going down, but now obviously the second generation as well. So yeah, I think those are the those are I think the impacts that you'll see from the second generation of companies that will further enable this third generation of business models.
Awesome. Cool. Let's talk a little bit more about Varda. So, what's the mission of Varda, and what is it doing right now, and what's the future of it in the next 5 to 10 years?
Sure. So, our core mission is to expand the economic bounds of humankind. Ultimately, in relation to that, sort of, thesis around, the sort of, differences in the Chinese versus the Portuguese approach. Our belief is that in order to, make, humanity multiplanetary, ultimately it needs to come through, economic activity, happening off of, the surface of the Earth that requires humans. And if you look at the current business models of space, whether it's, internet, satellite, constellations or Earth observation, those will really never have any need for humans, in that you'll always just be doing larger and larger parallel basically satellite systems, versus with something like in space manufacturing that is the type of sort of business model and operation that one day could actually justify an economic need for having humans in orbit, rather than right now the only time that humans are ever in orbit is basically when state governments pay for it. And so today we're basically focused on the in-space manufacturing of small molecule pharmaceuticals. Basically, when you're in the microgravity of space, the fundamental physics of how any chemical reaction functions is quite different due to the lack of gravity than how it functions on Earth, and that can allow for both negative changes to a drug's performance, but also positive changes, and that's something that has been decently studied now on the International Space Station, and Varda is basically commercializing it. And when we think about sort of what the future looks like for Varda, it's mostly just continued basically scale, cadence, and lowering of basically costs, just like SpaceX started in the early days with a fully basically disposable basically rocket system. We're similarly starting with a disposable space factory sort of architecture, but over time making the combination of the reentry capsules reusable, the actual space factory that's up in space reusable, and then both scaling the cadence of those being launched and the scale of those factories and reentry systems is how we expect the next decade to go. And the sort of core focus is how do we get it so that by call it 2030, 2031, while our current systems are fully automated, how do we make it so that they get to such a scale that you can actually justify the economic costs of having human on board, because the sort of amount of value that they bring in terms of maintenance, management, etc., exceeds the cost of having them up there.
Interesting. So you mentioned that one of the parts that Varda is focused on is basically making the reusability of that manufacturing. I don't know if it's plant or manufacturing thing that you're sending to space, right? Can you give us an idea of what are the costs and how much the cost would reduce by that reusability? Is that a similar cost structure that like with SpaceX, when they made rockets reusable, maybe they unlocked sending all these satellites for much cheaper compared to before. What is the cost structure, and how what will that unlock?
Sure. Our first mission, to give you a sense, end to end, in order to build a reentry, fly a space factory and a reentry capsule that can return about 40 kilograms of materials, cost us roughly on the order of about $12 million in total. As you think about basically on a go forward basis, even by our fifth mission on fully disposable architecture, just as we sort of work out the kinks and get some level of economies of scale, there's no reason why that shouldn't get down to about $4 million or so, and about half of that basically being sort of launch costs, and half of that basically being the rest of the sort of satellite system. As we think about reusability, sort of the first and easiest area is around the actual reentry capsule. Obviously, it already returns to Earth today, and so relatively easy to just sort of ship it back up on the next sort of space factory. That cuts out another sort of 500K or so. As you start thinking about the actual sort of space factory, that's a more complex thing to make reusable, in that that actually is obviously an asset that stays and lives in orbit. And so, in order to make it reusable, you need to invest into basically docking and rendezvous capabilities, where you instead have reentry systems that come dock with the space factory, exchange it for exchange for fabricated materials, and then comes back down. And so that type of docking and rendezvous, and creating a not quite space station, but a reusable satellite, something that can be approached, docked with, separated from, and then done again. That's something that is definitely a significant amount of engineering, but cuts out basically another call it million or so of the cost. And so there's a world where you get to basically call it like $2 million a pop for returning 40 kilograms of materials, and then the rest of the basically sort of cost curve going down largely comes from a continued decrease in launch costs. And so if you start to assume that by the end of the decade something like Starship comes online, and at that point there's enough pricing competition that a lot of the sort of cost decreases are passed along to the enterprises that are launching with them, that's where you get to a world where Varda, is costing on the order of like $50,000 to $100,000, basically per 40 kilograms that are manufactured. And at that point, it's like you're really more focused on scale, the economics of that type of production, relative to how much revenue you're making from the utilization of those drugs. It's sort of a rounding error. So that's call it that we see a path over the course of the next basically decade to go from this first mission, which was 12 million, all the way down to 100K. And there's definitely sort of steps along the way and improvements along the way. We don't have to just wait for Starship to start to get working on all of this.
Well, that's awesome. That's like maybe 100 times reduction if Starship comes online. That's a huge unlock, probably. With new like you can unlock a lot of new things there. So I'm excited about Starship and Varda and yeah. So let's shift a little bit of focus into back to your move from San Francisco to Miami. You're one of the most vocal people there moving to Miami. I love Miami. I end up moving to Austin, but I love it here. I understand why people. I also love Miami, so I'm always in Miami. Every now and then. But how has it been moving to Miami? Like, what do you think is the future of Miami? Any regrets of leaving San Francisco?
Zero regrets. If anything, I wish that I had sort of done it sooner. Love living here. I find myself to be healthier, happier, more productive, more focused. I think the lack of basically like the intellectual bubble of the Bay Area is significantly freeing. And as a sort of moderate based Eastern European immigrant that is pro capitalism, pro growth, pro technology, those values in some ways are completely antithetical with the Bay Area's sort of core values in politics versus sort of very aligned with my sort of core thinking. And so very happy to be here, and it's been great seeing this ecosystem grow. Where basically moved here about 2.5 years ago now. And I think if you look at it relative to any other sort of net new tech ecosystem, where were they at and how much progress had they made 2.5 years in? I think Miami's sort of incomparable. It's rocketing it up to being one of the call it top 5 ecosystems in the United States, and I think has a real solid shot in becoming top 2 and potentially even the top 1 over time over the coming sort of decades. And so I just think it's just a place that aligns with the core values of tech. Much more so than the Bay Area ever did, and I think that's what really gives it a sort of strong shot. Still, obviously, a long ways to go, but very very solid progress for 2.5 years in.
Yeah, it's interesting. I think probably Miami is one of the fastest growing, if not the fastest growing. I think New York definitely grew a little bit more because of that outflow of people from San Francisco. So I think I saw a lot of people moving, and you see in the earlier stages like seed and Series A money. I think the biggest city right now is New York, and then you have Bay Area in general. But Miami is growing, I think, the fastest. And I think even Bibi, the Prime Minister of Israel, was saying, look, the biggest cities in tech right now are Tel Aviv and Miami. In reality, I think Tel Aviv has more unicorns than the rest of Europe. You mentioned Europe as like a more deranged Silicon or San Francisco, but Tel Aviv seems to be doing pretty well in terms of unicorns. And I'm not too sure about the restrictions on starting companies and like all the other bureaucracy, but there's a lot of great companies being formed there. So let's end with one question around Miami. Like, what's the most special part about Miami? Like, what do you like the most about the city?
I think that it has a couple of different, sort of key factors that give it the potential of being one of the strongest and best tech ecosystems. The first is in some ways just like city infrastructure, in that it's a highly dense city in terms of just like building heights here are very high, on a population density basis is high. And so what that allows for is a very walkable city where you do get significant spontaneous interaction, right? I, on a regular basis, when I'm walking around the streets, basically in front of our office, run into basically people that are also in tech. And despite the fact that the ecosystem is relatively small, there's still a lot of those interactions, even though it is so small, because of the city's infrastructure. If you look at something like LA, even though it has a really strong like aerospace ecosystem, because of just the way that the city is structured, you never run into people on the street because none of LA is walkable. And I think that type of spontaneous, like, sort of encounters are critical for really making what feels like a cohesive ecosystem, and is, what really, helps, around, sort of company generation, because a lot of times those spontaneous interactions is what leads to, net new companies. So I think first it's like city infrastructure. Second is just like, sort of local political alignment, right? Miami is the only basically major, metropolitan area in the United States that is like truly purple, right? Truly half blue, half red. And so there's not sort of, crazy policies from either party that can get across the line, given that the city's, sort of relatively, 50-50. And and it's not just basically the local policies, but it's also, if you look at the local population and where it's from, it's an extremely basically like immigrant, friendly, town. I think it's at this point something on the order of like 48% of Miami's residents are foreign born, and that they're immigrants, and a significant portion of those immigrants are immigrants that escaped socialism. And so I think if you look at some of my fear about what's happening with the rest of the United States, a lot of it is just like the proliferation of just true socialist thinking that I think can truly lead to the demise of our capitalist society. And I think Miami in some ways can be that stronghold, given that you have people that have sort of relatively recently, whether it's the Soviet Union or Cuba, sort of seen, or Venezuela, seen the huge downsides of these types of sort of socialist policies. So yeah, I think it just, yeah, those are some of the sort of strongest suits. And then at least for me personally, as somebody that's this Mediterranean immigrant, I just love the weather, the food, the climate. It just really sort of makes me far more productive. I totally understand why maybe like a Swedish person might not love it here. It's probably a little too hot, too humid, too sunny for them. But for me, this is definitely what makes me by far the most effective.
Awesome. Thank you so much, Dalian. How can they find you on the internet, and if they want to contact you or find you on the web?
Yeah, the easiest way is probably on Twitter. So twitter.com, or X, I guess, x.com/Zibulgar is probably the easiest way.
All right. Awesome. Thank you so much for taking the time. Really appreciate.
Thanks for having me.